trade I took today. Also, Happy New Year. It is now a fresh trading year, so let's smash it 2024. Okay, so getting right into it. We got gold again on the higher time frames here. Just use the replay tool, so I want to kind of frame out what I was seeing as I hopped on um, when I hopped on the computer for New York. Okay, so this candle, this is previous day, which is Friday the 29th, so it's last week. If I simply just mark on high and low, type previous daily high, and then previous daily low. Okay, so as you guys know, I only trade New York sessions, so let's hop on I'll leave on the 15 for now. We'll mark on our times here. So we got London open here. Here we got Frankfurt and New York here. Perfect. So let's just fast forward this quick. So approaching Frankfurt, price pushes up, takes out this high, which is, again, previous daily high. Also, let's dissect what's been going on over here. So on Thursday, we printed a low in the market, okay? And then we went bullish, respecting these areas over here and continued selling off. This now tells me sellers are induced in the market. We do want to see price trade above this high, okay? We will not be trading with structure. So you can see how price actually runs up into this area, false reaction, and continues up. Also, we've taken out this low to the left, which tells me this is also, which is previous daily high, an inducement high. Okay, and that's why price ends up running up, clearing that liquidity from the high. And also, if I go to the 1 hour, taps right into this hourly liquidity block area. Okay, there it is, right there. Perfect. So we're gonna hop on the 5-minute here. Okay, so now that sellers are trapped, that classic play we usually see, right? If we're in a bearish market and you see price take out a previous daily high, usually we'll get to see that the market run down and take out that previous daily low, right? So that's just another confluence. Let's get rid of this now since we've already ran it, and we'll just mark it like this. Perfect. Okay, so again, we're approaching Frankfurt. I don't trade these hours, but we'll still scope out what happened. Price took out some internal points over here. Most likely can see a run above here. Trap sellers, which we do. We take that high out. Now price comes down back to the lows where buyers will be entering positions, false reactions, and then continue lower. There you go. So we continue lower. Now, since we've taken out this high, again, why is this important? This is a break of structure for retail. They see that as an opportunity to buy these areas when price comes down to them, right? These imbalances here, these order blocks here, whatever it is, they're going to be buying this thing. We want to see price to the downside, okay? So every time price gives a false reaction at these areas, wherever it is, it's just going to be providing us an opportunity to sell into that liquidity, okay? So we're approaching New York. Oops. Let me just, oh, nice. That was great. Okay, so apologies about that. I kind of just screwed that all up, but let's go back to where we were. Okay. Again, we're approaching New York. Cool. So let's declare the chart a little bit here. Past Frankfurt, past London. So we're approaching New York. I was simply waiting for, so I saw this high up here that price was actually coming into and respecting right now. So I wanted to see price above this. That was the first step. I saw that we were respecting this area to the left, which again is where buyers are buying from. Okay, so these are just false reactions. Again, look how we're building liquidity at this area. We actually even pushed lower again, which is fine. And then we go bullish and take that out. Okay, cool. So now let's hop on the lower time frame and see what's going on here. Okay, so we take out that high, and we've actually mitigated this 1 minute imbalance we got to the left. Completely filled it. Perfect. So now we need to wait for some sort of entry to come about. We actually end up selling off to the low, respecting the low, engineering more liquidity, so leaving equals. And then we take the low. So what does that tell me? Since we've taken this low, we do not want to be selling this at least below here. We need to see where liquidity is going to be built at, okay? So this is when patience is going to be really important. We can also see that this is technically a liquidity block area up here. Not technically, it is a liquidity block area. Why? Because we've taken out highs to the left-hand side over here, okay? So this whole area is a liquidity block. But first, we need to see where that liquidity is going to get built at. We're still trading within this whole area, which is still a confluence as to us seeing price trade lower, okay? But not only to these lows, or sorry, to this low I have marked out, but we still have, look at all this liquidity we got here. And then that higher time frame area we spoke about at the beginning of the study, okay? That previous daily low. Okay, perfect. So price comes up. Look how we respect this area up here, built liquidity. That now tells me I want to see price above here in order for me to take a trade, okay? Also, since we've just sold off from here, okay, and again, taken out another low, I will not be looking for sells until we take out this high, okay? Because this is an area that sellers are going to be wanting to trade from. Price goes long. Look how it comes back up right into that area we marked out, okay? False reactions from it. Look at that one big, one bearish candle. That's going to be playing with a lot of people's emotions. Again, another one, and then we come back to the high, stall at the high, and finally take it out. This right here is our entry, okay? All that liquidity is taken out, and we just tapped into this liquidity block area. Stop could have been just like this. And targets. My first target was, as you can see from the left here, we had this inducement low, which I was targeting, just like this. Okay. Perfect. So again, this is when our entry was taken, almost right at 10 o'clock as well. So let's keep playing it. We get tapped in, goes in profit, no problem. Always stay aware that when that first reaction, we can always come back up and induce higher once more, right? This is M1, right? So we can still clear that liquidity at the highs and then drop, which is exactly what we do. We take out that high, look at the time, right at 10 o'clock. And there's that drop. And then we squeeze for a little bit. Why are we squeezing? Because buyers are looking to buy this thing down here. So it's purposely inducing them, which tells us if buyers are interested in getting in, there's going to be a ton of liquidity below that low. And we're selling into that. And boom. Just like that, 1 minute candle takes out all of that liquidity. All right. So I hope you guys enjoyed this case study. Honestly, it's a great trade, great way to start the year.